Welcome, everyone. It's a pleasure to have you with us today and a pleasure to introduce you to our two speakers for the webinar, Boris Bukowski, Vice President, Solutions Management and Consulting for SS&C Advent. Boris leads SS&C Advent's asset management market strategy with a focus on Advent Genesis, the firm's cloud-native platform. He also oversees the U.S. Solutions Consulting team, primarily focused on advising asset management clients on solutions for their firm's business and technology needs. In addition, we have with us Jake Urban, VP of Investment Operations for FCI Advisors. He'll tell you a little bit more about his firm in a moment. Jake has over 10 years of experience. He's been with UMB Investment Wealth Management in performance analytics, also in the fund administration function at JP Morgan in New York, and the hedge fund pricing area at Bank of New York Mellon, also in New York. So without further ado, let's talk about our speakers and today's topic. Starting with you, Jake, I promised we'd talk a little bit about what you do at FCI Advisors and tell us something about the firm. I think it is notable that your firm's tagline is centered around you, which certainly speaks to customization. So tell us more, please.
Thanks, Nancy. Good afternoon, everybody. As Nancy mentioned, I'm with FCI Advisors. We're an RIA in Kansas City. We've been in business now for around, I think it's 56 years this year. It was started by 3 individuals with just a few relationships here in Kansas City. And then when I started with the firm 7 years ago, they were around 8 billion in AUM, with many, many more clients than they started with. We've since grown to around 14 billion, managing assets for roughly 10,000 clients now, with a staff of only 65 throughout the country, most centered here in Kansas City, but some remote offices around the country. It's really comprised, those 65 people comprise about 40 portfolio managers and 25 operations and client servicing staff, compliance, things like that. And we have a wide variety of clients that we serve, mostly discretionary high net worth. That's the bulk core of our business. But we do have a smaller number of institutions that make up a large part of our assets. And we also have a growing business of banks and trust companies around the country that can't really efficiently provide investment solutions in-house. So FCI provides them with that investment management services for their high net worth clients, essentially as a private label. We do everything in the background. They present it as investment management provided by FCI. The majority of that business line is discretionary, but we also have about a quarter of that, which is a couple billion in non-discretionary business, where we have to make recommendations to either the bank or the individual client at that bank for their approval on our investment recommendations, and then we execute. So there's a lot of different parts that we have going in and out. As we've grown, we've sort of added a little bit through acquisition of business lines, but most of it in the last 5 to 6 years has been organic growth, not with a lot of advertising, mostly just referrals, beneficiaries, things like that, as we see move money generation to generation. As far as complexity on the operational side, we've got roughly 70 custodial accounts to support that client database. So you're looking at different connections throughout the world, really, trying to get information in to have the best information available to make investment decisions. So there's a lot of moving parts. And as far as my role at FCI, I'm the Vice President of Investment Operations. I'm responsible for overseeing our portfolio accounting systems, our trade order management and trade order creation systems. I dabble a little in project management, keeping those things going and moving things along, new initiatives, and vendor management as well, vetting a lot of things as far as when we're looking to add new technology or new services. And I oversee the daily reconciliation performance measurement process. So that's a little about me and sort of what FCI is and and why Boris asked me to help him out here. We've been a client with Advent for quite a while, and just recently moved to their AOS sort of outsourcing of our operations, pieces of our operations, and then also their Genesis cloud platform.
Well, that is impressive. That's a lot. And certainly congratulations on the growth that your firm has experienced, which is lovely. It has to bring with it a few challenges, I would imagine, though. And so perhaps you can tell us something about those and how you've managed through them.
Yeah, absolutely. I mean, during that growth period and continuing, there's always sort of pain points along the way. We grew pretty quickly over the span of only just a few years. And that really put a strain more on our people than anything, because we were very, not tech adverse, but we weren't as current as we could be. So when I started, that was one of the first things we reevaluated, is where do we stand technology wise compared to peers. Talking to a lot of other firms, seeing where they're at, engaging with our current vendors at the time to see were we on the best available solution given what we were trying to do. Everything we were doing was pretty manual and also pretty decentralized. So processes that were more siloed by relationship than they were by common processes that could be spread, centralized into one group and affect everybody. So really switching the way we thought about doing business, getting the people to understand, all right, so we're going to have some upgrades, some projects, some conversions that we're going to have to go through, and it's going to be really tough, but we're going to come out better on the other end. And anyone that's been through any sort of big upgrade or big vendor switch, it's painful. And it's for the people implementing, for the users. The idea is to keep that away from the clients as much as possible, but struggling to get through that sort of culture switch and also process switch, because being a smaller company as far as employees, you have people that have been there 40 years and people that have been there 40 days, and they're each going to have different thoughts on how nimble they are in changing. And if you've been pushing that same button for 40 years, I don't really want to push another button. So you have to sell it internally. You have to make them see that struggle that happens and those pain points you see, there's a better thing on the other side. So that's really the hardest thing we dealt with, was really an internal struggle to make everybody on the same page. And we got there. And it actually, a lot of our conversions that we went through over that time were, I've been through many over my career. These worked really well, one, because of our partners, but also because our people were on board, and our people, really, stepped up and made that commitment to make the processes better.
Yeah, change management is hard. It's the hardest thing. Yeah. So both, helping people through it and see the benefit on the other side, on the inside, and choosing the right partners, I'm sure, are really important ingredients. Boris, does this ring true based upon your experience with your clients? I'd love to hear your perspectives.
Yeah, thank you, Nancy. Thanks, Jake, for participating as well. So, we're at SS&C Advent, we've got over 4,000 clients, and I have the privilege of speaking to many of them every year. And many of them are just, firms that are looking for potential problems or solutions to the problems that Jake just outlined, right? They're maybe growing to, the growth has caught up and they've hit a certain ceiling in terms of what they can do with the people they have, and investing in technology is the decision that they've chosen, right? And I think that's a big decision point that a lot of firms that we're talking to are coming to. So, I think finding that right balance between how you deal with some of that growth, right, and then scale between technology and investing in technology, investing in people, where you invest in people, certainly what a lot of the firms that I talk to are struggling with. And when working with a technology vendor, and obviously in our business, our only business really is to provide front, middle, and back office solutions to investment firms around the globe. That's all we do here within SS&C. So oftentimes we're coming in and we're talking to them about, how you can iteratively start to augment some of your operating model, right? Because I think a big giant change is very scary, right? And Jake highlighted a few of those things that you have to really be careful with. Primarily, primary goal trying to be as least disruptive as possible to the investors themselves that you cater to. So we really sort of look at it and talk to our clients and ask, where are they trying to make the biggest impact? Where are they seeing the biggest bottleneck? And I think whether it's with technological solutions that you implement to help automate certain processes, or whether it's augmenting some of the operational workflows with some outsourcing services, a lot of firms are definitely more open towards solving those scale challenges that way than they are historically, which is continuing to find people, which I think we can all relate to. Finding people has been particularly difficult the last couple of years. So even with that headwind itself, I think a lot of the firms that I talk to looking at various ways to allow the firm to grow without having to go that route has certainly been top of mind.
Yeah, that certainly makes sense, and something that the whole people challenge is universal. I think it doesn't matter what part of the organization or what type of organization. It seems to be a very, very big management challenge right now, and so these events are always more interesting with attendee participation. So we have 3 polling questions for our guests to respond to today, if you will. And so the first one is coming at you now. The question is, do you view offering customized portfolios or customized variations of your firm's strategies as a differentiator to attracting and retaining investors? Yes, no, or maybe. And then I guess I would say, as people are voting, we're using this term customization, personalization, customized portfolios. Boris, would you just level set for us so that we are all on the same page with respect to what we're talking about?
Yeah, would love to. It's somewhat it can vary, to be honest, right? It's a fairly subjective concept, and I would say the customization spectrum starts on one side where it's a very purely model driven type of portfolio management approach, where you've got a certain certain set of risk profiles and they fit into a specific model, and you maybe tweak a little bit around that, right? Maybe a restriction here or there, all the way to full customization where no portfolio looks like one another. And I think, if I just take a step back and think about my own business, one of the roles that I'm responsible for at Advent is to drive how we create product, right? The decisions that we make to go into delivering products to firms like FCI Advisors. So for us, one of the, you could have a solution that we come to market with that is very rigid, and most likely there's a very small amount of people that will fit and they will derive value from it. Or we can come to market that is purpose built for every single firm, and that one client that was the last client I talked to will love it, but it's not going to scale and it's not going to make for a good business. So really where we're seeing customization conversations come up the most from the firms that have experienced that scale is obviously they want to retain what they had when they were a 100, 200, 300 portfolio firm, and they want to apply it to their 3, 4, 5, 6,000 portfolios now. And how do they do that without any drop off in their portfolio management approach? Some of the main factors that we're hearing when it comes to customization really around, primarily number one is tax awareness. There's a lot of things that go into that, right? So we can talk a little bit about, I'm sure Jake has a slew of examples around that as well. Investment restrictions have always been a key factor into customizing portfolios. Those restrictions can come from the clients themselves, often perhaps large positions that can't be held or that can't be sold for whatever reason, or maybe they've got some sort of preferences. And then finally, also legacy holdings are a big concept, right? We've got these portfolios that come over. You might have a founder of a company can't sell something for a while. It's not part of your strategy. How do you work around that? And I think how does that all tie together as well, right? Because those legacy holdings perhaps are part of a transition strategy, and that transition strategy takes several months or maybe even longer to unwind into the strategy that you want them to be in. So all of those things really come together, and figuring out how you can do that as automated as possible is really the key that folks are looking for. And oftentimes those are the technology solutions that we're talking about as well. But the one thing we have found is that it's very rare that any one technology will fully automate the customization process. It gets you somewhere to a point where it's further away from fully manual, but portfolio managers are still engaging. Compliance still has oversight into decision making, right? And you have to have not only that oversight, but also what a lot of firms don't think about when they're thinking about, how do I implement my customization? Is how do I report back on that customization? My investors have come to me and they've expressed interest in ESG preferences, right? Which is very topical right now, and they really want to shift their portfolio into a more climate-friendly portfolio. Well, how do you communicate the impact of that shift back to that customer, not in the standpoint of performance only, but from the standpoint of what that shift made as well? So I think finding that balance between implementing the customization at scale and then still communicating with investors and even back to the investment team, the implications of those, that's really what how we're seeing firms define customization, right? And the problems that exist around customization.
Thanks so much, Boris. That's it makes a lot of sense. Jake, would love to hear what, in your particular case,
those factors are very much part of what drives our customization. It's their risk profile, it's their specific needs as far as, especially as most of our base is our trust clients. There's a lot of specific needs in there for a lot of those trusts, foundations, that have certain cash needs and are potentially wanting to avoid certain investments. We see religious restrictions as well that come up if we're working with, a specific church or a specific community that don't want certain assets that are, sin stocks, for example, or Hollywood stocks is one that we see avoided a lot. We'll get random things like, I just hate the CEO of X, and I do not want that stock, any bonds, anything associated with that firm in my portfolio. And, if they're a long enough, good enough client, we're going to make those customizations for them. It's something that they're very passionate about. And, whether that's our stance or not, we're there to serve them, right? So, we'll advise and we'll need to make those changes and find ways to do that where it's efficient. So they may hold in our strategy all but, every other stock except that one. We've got to find ways to keep that account in that strategy modeled and following the goals of that strategy just by and excluding. So having an equivalent or having, some sort of substitute for that piece in the strategy to keep them along, but not having to do that really continually. The big thing that we like to see is something we can solve up front, and then ongoing, it's not an issue. So it's a one-time, they come in, here's what we want, we set that up, and then with that asset, we don't have to worry about it. And having flexibility with all of that too is really essential to make customization work in scale. We're seeing a lot more political, not necessarily on just the ESG side, but actual, political sort of stances being raised to portfolio managers. with just sort of everything that's going on in the news. So finding ways to adapt to that. And one, you've got to be able to quantify all that stuff, capture all that data to say, hey, this fits into this fits into that. And that's tough. I mean, we have a lot of data available to us. Everyone in the industry does, but there's always something more out there, right? That you can get to. And that's really what drives our customization is really the client saying, well, one, the client's needs drives it first, but then, you know, there's certain cases where the client is very specific on one of their wants that we have to sort of cater to, because we want them to have the best experience possible. So balancing those two and balancing how we do that at scale, you know, for 99% of our clients, everything sort of works the way it's supposed to. But, you know, when it's even 200 clients sort of wagging the, you know, the process, moving the process along there and moving the restrictions, that can slow everything down. So it's finding ways to make all of that work and make it work as we continue to grow.
It sounds like all that client sensitivity can get pretty granular.
And I'm not even the ones talking to the clients. So like, if I'm feeling, I can't even imagine what the client facing people have to talk through it and just consider, you know, when they're working with individuals.
Yeah. So what has worked and what hasn't worked? What's fallen short? Can you point to anything in particular?
As far as just overall in the customization process and you know, our first solution as we started to grow, you know, as Boris sort of mentioned earlier, was to throw some bodies at it. You know, you just, oh, you know, we're growing, we're making more revenue, so we'll just put some more people on it. And, you know, we found that that's a good short-term fix. It can be anyway, but you spend a lot of time training people. And you also see a lot of turnover, you know, and luckily we went through that a few years ago, so we weren't hitting in sort of the sort of people crisis we're in now. But we did see that we were asking people to do sort of repeated mundane tasks, right? And that didn't bring us, the people that wanted to do that weren't the people that we really wanted to have grow in a career, or the people that could do it and were very capable didn't have a path right away. So they're going to go find another opportunity. So we really had to evaluate, okay, is throwing people at it the best way to do it? Not if we're going to continue to grow. So after realizing that was a solution, we started really, which was a big step for our firm, taking a look at technology and outsourcing. For a long time, and a lot of firms I know went through the same thing of like, I don't know if I want to put our stuff out there, have someone else touch it. Security risks are always a concern and continue to be so. But we really wanted to see if we could leverage technology. So we found a provider that at the time we thought was a good partner. And we thought we were on the same page and both sides were looking at outsourcing the same way. But we made the mistake in our approach of trying to outsource the hard stuff. So we went in like, all right, here's our really complex stuff. We know you can do the easy stuff, but here's the really, really hard stuff. And it just, we couldn't get that transfer of knowledge, right? So we kind of had to, after about a year of struggling there operationally, we flipped it and we figured out, well, why don't we just get rid of the easy stuff? No one wants to do that here anyway. It's the most easy transfer of knowledge over to it because it's all on the vendors and it's automated. And that's when we approached Advent and went through that process with them. And we figured out, you know, that they were going to be the best partner for us. They understood what we needed. We've been clients for a while on their platform. So they understood really what our universe looked like as far as data. And we went through that whole process of what are we going to outsource? What are we going to not? And then we got our recon became really stable. It was something we struggled with a long time doing it manually, but getting 90% of the easy stuff out of the way and onto somebody else's desk where we just do exception-based processing, opened up our people to do the challenging stuff. And when you're challenging people and you're giving them problems to solve, we find one that people are a little more sticky, but also the people that want to do it are the people that are naturally inquisitive and want to have a career and want to really move through the firm and help us out in different ways. So we've started sort of using our operational group as a bench for the firm. So we can sort of get people that, hey, they really excel at this problem solving. Maybe they'd be good as a trader or in customer service or in our account setup, things like that. So moving towards a not fully outsourced, but a partially outsourced process, just because of the nature of our business and how we are in many different types of clients that are out there. We found that partnering with Advent and then taking on that piece that really freed us up to do more. We were able to reduce our headcount that we had added in that process, not by letting people go, but just not filling as people sort of moved off and moved away. And that for us was huge. It made it to where converting to an outsourced model could help us scale. We have now capacity to add more and more as we grow. Not only the scale factor, but it helped us get better at what we do. And it helped have people have more confidence in our system. So that's what ended up working for us. But we went through a couple iterations of failure to get there.
Thanks for being so frank. No, it's very helpful, helpful illustration. Time to hear from the rest of you now with polling question number 2, which is about to appear. And the question is, what area of the firm would you most like for your technology to be more efficient when managing portfolio needs? And you've got some choices there. May take a little bit more thought than yes, no, or then, but hopefully people are responding. And there we go. Well, it sounds like operations, that's a pretty classic response, followed by portfolio managers and advisors, then trading, and then compliance. So it sounds like people are pretty much on the same page. I would be interested to know, and I imagine others as well would be, outside of the purely operational elements, what are the other things that you've had to take into account as you've been making these moves?
I mean, the big one obviously is it cost efficient? Does it make sense? Affordability is, obviously on everybody's mind. So does what we're getting make sense for what we're paying for it? And that's a tough process to go through to evaluate that. You can't really put everything into numbers. You can't. You got the people aspect of it is a big part that you can't really calculate and you won't see on the bottom line, but you can't sell that to somebody that needs to write the check, right? So, that's part of your pitch, but you've got to make it to where, all right, if you can eliminate some things. We were able to, when we converted, eliminate some costs or really just roll them into one, consolidating vendors. And we've seen that is our biggest sort of saver. And that's part of also the benefit is having one place or going from many places to get information to having just a few places where you get information. So that works. That has to happen in my mind, or it had to for us anyway, to scale, is instead of, a user going to this place, and this place, now they just log into one area and all of their tools are there, all of their information's there. And that's really helped their days be more efficient. So especially our portfolio managers, they're able to now spend less time looking for things and more time talking to clients and thinking about investment decisions. So that's one of the things that we considered, and making sure that it kept our 50+ year culture intact. There was concern there, especially people that have been there a while. Will this scaling and customization, sort of more modeling and more consolidating of things into sort of more efficient groups, does that fall in line with how we've been over the years? So we've had to really work on trying to maintain the culture aspect with a lot more team building things and talking about our founders and our history, which people love the stories. I mean, one of our founders, Bryant Barnes, passed away a few years ago, but up until then, since the 60s, had been coming into the office every day. I mean, he was in the office every day with his Wall Street Journal. Really was not loving the computer, but spent a lot of time walking around and having that influence. And he was on board with all this stuff when we went to do it, because he's like, yeah, we got to get better. We've got to keep up. He's like, I'll never touch it, but all these other people, they need to know how all this works. So balancing, keeping our culture with making these changes has been something that we really considered through the process.
I would imagine is a shared experience with many of your peers in the industry, that the whole maintenance of culture amidst all the things that have been thrown at us lately,
Right.
is a huge thing. Boris, how does this stack up with the experience that you've had with your client base?
Yeah, I mean, it's very aligned, right? And I think the decision points, I mean, if we just look at the first half of this year, we have contracted with over 20 firms across our client base, and over 90% of them have chosen to adopt some level of managed services, right, to help alleviate some of the future growth that they anticipate, right, but also to smooth out their cost structure as a business as well, right? Because when you move to a model like this, it becomes very predictable, right? You eliminate some of the choppiness that comes with having to add new headcount or big bulky technologies. So I think that's one of the benefits, whether it's our technologies or any technologies and outsource vendors, is things are just getting lighter and easier to adopt and easier to plug into to an existing operation. And you know exactly how much each account is going to cost you, right? And it just makes it a lot easier to manage the business. So I think that's a big part. In addition to some of the things we talked about with just being harder to hire these days for some of these work. For some of this work that we're seeing such a big push towards augmenting some of that operating model. Now, I noticed the portfolio manager advisor was number 2 on that list in the last polling question as well. I mean, we talk a lot about in the customization and about identifying exceptions at the operational level, right? Figuring out why there's some unique cash flows or something happened because each individual, they have their own personal financial goals and their personal financial activity that it's hard to track in a business like that. On the portfolio management side, it's just as important to identify exceptions. I think what we see when you have a lack of technology to support that is you increase the amount of noise that PMs have to deal with, right? So drift that isn't really drift is a great example, right? So when you have legacy holdings that impact and show that you're overweight somewhere than you should be, and the PM has to just remember that that's a nuance of that account. Well, the more that you can do to check the boxes on the different factors that you want to account for your clients, the easier it's going to be for that PM to manage 500 accounts and then manage 1,000 accounts without having to add another PM. And I think it really does cut both ways, where you need to solve with either the services or technology if you're going to try to drive a business like that with while still catering to a lot of the individual investor demands and preferences. And I think we can all probably relate. Those demands and preferences are not they're not reducing, right? People have more and more demands and preferences, but they're not necessarily willing to pay more either. And that's just a that's a challenge of our industry as a whole. So how do we diversify our services? How do we provide additional access to strategies? How do we retain that high touch, but how do we keep the costs in line as well? Because the expectations of how much investors are willing to pay is coming down as well.
Yeah, that's a tough one. Another universal truth. So, Jake, adopted this technology, you've got people on board. How has it influenced the firm's ability to drive growth?
It's been, honestly, it turned out better than we thought. Even, we're only not even 3 years into it, in the sense of the full model, but the amount of efficiencies we've seen is, we thought it would clear up a lot of our time for our people, and it certainly has. And I don't think we're even maybe utilizing 75% of what we could and what we plan to, because we're still growing with it. The great thing is, as Boris mentioned, unlike a lot of our past software, that was, we always like to say, no matter what you need to change in this system, it's $6 billion and 6 months. Like it's going to cost you money. It's going to take too long. What we found with the cloud-based technologies, with Advent and with some others that we're utilizing, we can get changes done in weeks, and it's included with the service. Like, we'll work with, an issue on the web-based platform, say, hey, we're seeing this. We kind of want to see it like this. Is that possible? Their product development will go through, look at it, make sure it works. And like, well, does this work for our other clients? Are they interested in it? And then if it is, it gets kind of pushed on the roadmap and moved up, and we'll see it, in a couple months, and we didn't have to write a check for it. So that, seeing that evolve and solving problems with software kind of as we go has been huge for us. And we've been seeing the ability to create new accounts, and that process has been streamlined now because we have, sort of the back end, service team working on that and off hours. And so when our people come in the morning, they can enrich the rest of it and get it flowing. So our process to get accounts on the system has gone, from basically a day and a half to less than a day, to get these things set up. So we're seeing things like that. It builds up over time, and so much so that we solve so many of these big problems that now we're getting the little ones. We're not coming along, it's not, the complaint isn't I can't do it. It's like, now people are starting to think, PMs, operational, client services, all of them are starting to think, is there an easier way to do this instead of just like, I've got to get through my day? That change of mindset from surviving the day to improving your workflow is huge. And that's how we're gonna continue to grow. Staying on top of it and keeping people in that space of improvement and not maintaining, is going to be a way that we differentiate ourselves, continue to provide our clients with tremendous service, but also being able to add more clients without, sacrificing somebody's workday and their ability to excel at what they do.
That's nice to see that sort of innovation mindset take hold when people see what's possible, isn't it?
Right.
Can you talk a little bit about like tips for managing your outsourced services, and what can't you live without? If you had to name, like, oh my goodness, this would be really a big challenge if I had to cut this out of the picture.
Right now, it's all of that repetition on a daily basis, specifically the recon piece, because that's for us, really throughout the firm and in this industry, data is what drives everything. So having that done early in the morning, accurately, and efficiently with scale, with very few sort of exceptions that we have to go through. Previously it would take us, well into the trading day just to get to the issues we need to solve. The rest of it was just button pushing. The technologies allowed that to be automated and, done overnight to where all of that exception process can start before the bell. So when, PMs go in and log in the morning, they're ready to go. And, having that in there, having that data, because that data drives everything else we do throughout the day. Going back to where we were would just be, I don't know. I couldn't do it. Having the basic part done at scale, because we used to be able to do it when we were smaller, but once we scaled, the data just got too big and processing times on things got too big. Leveraging technology that can cut those processing times down exponentially has been a game changer for us.
That makes a lot of sense. Data is a mixed blessing.
Yes.
Anyway. Yeah. You've been in business for a long time. You must have some very, very long-term relationships. And I think a lot of folks are facing oh my goodness, what next? How do you bring in the new generation as those folks age out potentially?
Right.
Anything to say about how you're addressing that, and has the technology, the automation helped you to sort of bridge into that new generation?
Yeah, we see this really as one of the biggest challenges we're going to have going forward, because especially our client base, mostly being trust clients, some of those are a little stickier with beneficiaries that they have to go a certain way. Things are kind of mandated, but some aren't. So it's how do you get to that generation? And especially given our volume and the number of clients, it becomes difficult sometimes to really just know the client as well as you want to, much less spreading out and knowing who's going to be that next generation. And we know most of the people, on our client list are at retirement age or approaching. So we've really got to get to that next generation to show that we can provide them a good service as well. So that's really our next big investment is bulking up our CRM, investing in that technology to be able to capture that stuff at scale and plan for it as far as how do you get to the next generation. And the more time we get, our client servicing individuals off of their desks as far as just focusing on, moving trades and pushing buttons and watching, the more we can get that to a customized models situation within the Genesis platform, the easier it's going to be for them to start building those relationships. And that's where their focus is, the investment team and the client facing team, their focus is on getting that next generation. Our focus on the operational side is to give them the time to do it. And so really those two approaches going together are how we're trying to approach it. But CRM is where we're going to be putting, the next slug of money to really help facilitate that technology wise, and to get to that next generation.
Makes a lot of sense. Free people up so that they can do those fun relationship management things and really dig into the details and get to know people. Boris, how does this ring to you?
Yeah, I mean, everything Jake went through certainly resonates. I think a lot of it, right, is rooted in this notion of automating the redundant processes that exist, right, freeing up those tasks. I think there's a lot of opportunity going forward in our industry, right, and thinking about how to continue to push that forward, right? If you look at a business like Jake's, where they've gone from a few thousand accounts to double that, right? 13,000 accounts, right? Growing from there, dealing continuing to improve that onboarding process where the CRM does come into play, right? Where trying to, you mentioned that the process has become streamlined, but there's probably a lot of room to go. There's probably still a lot of paperwork there, right? There's probably still reaching out to a lot of counterparties there, making sure accounts are set up, right? Making sure the right data points make it all the way through the different systems. So I think, there's a lot. That's the exciting part, right? This is a business where, the type of business that surrounds this sort of separate account business, this portfolio, this need for continuing to support customized portfolio management approaches, there's still a lot of problems to solve. So I think that's an exciting part where we'll see some advancement as well, and I'm sure a lot of firms are looking for some solutions there. So it's good to hear the CRM comment there, because I think that ties in really well into some of that onboarding and how do we get it from a potential client to an existing client, and what is that workflow, right? Where's the compliance fit in, and where's the automation fit in? But I think that there's just a lot of really great, advancements that are probably going to start to happen for businesses like Jake to continue to push the envelope. But we talked about a few different factors like tax awareness, right, and some of the some of the restriction management that you need. But we're seeing, I've talked to a lot of firms recently that were purely pooled fund managers, right? They had a strategy, and they basically said, look, I've got this strategy, and I want to it's a quant-based strategy, but I want to scale it across the separate account business. And those are two very different businesses. So I think we're seeing a lot of folks looking for technologies to incorporate more risk-based optimization, right? So coupling that, or quantamental, right? A little bit of a combination of fundamental portfolio management and quant. So those are all areas too where I think, we think about exceptions, and adding systematized support for exceptions and factors, right? I mean, that's where we're going to see a lot of this going. So, I'm excited to see a little bit of where the automation goes and where the technology goes and service goes to support businesses, because FCI, whether you're FCI advisors, whether you're another asset management firm or wealth management firm, you're just continuously evolving, right? You're looking for new ways to service clients, to provide value to them based on what their demands are, based on markets you want to get into. So, we're excited to sort of see those demands and try to respond to them with solutions for our clients.
Yeah, it's all about understanding how you can help, right?
Yep, exactly.
So we do have one last polling question that we'd like to ask our participants to respond to. Polling question 3 is, does your firm currently have the technology to help facilitate direct or customized indexing solutions for your clients? Please just pick one. And then as people are responding, oh, there we go. So a lot of people in the exploratory phase, 53% say not now, but we're exploring technologies for our portfolio management team. Some are already there, and some people are still not making plans to go in that direction. So thank you for your responses. I guess I want to make sure that the chat will include contact information for our 2 speakers today. But as we close out, I wonder if either of you have any tips on kind of best practices in terms of engaging with your clients, in your case, Boris, with your technology providers, in yours, Jake. I'll throw that as a jump ball.
You want to go first, Jake?
Sure. Going through this sort of the process of choosing a vendor a couple times as we were growing, what we learned through that, one of the biggest takeaways I had was there's really two things that we needed to know. One, we needed to know ourselves, right? We needed to take a better look at what are we really trying to solve? Where are we trying to go? What are our goals? Because if you don't know it, whoever you're going to partner with, whatever vendor you choose, definitely won't know it. And so that's where you may see a disconnect. So really do the due diligence up front to get to know what you're trying to get out of that partnership. And then once you know sort of what you're doing, the one thing in the when choosing a vendor that we found was the overriding sort of benefit, and it kind of cascades down to everything, is finding someone that wants to be a true partner with you. Not someone that's trying to just sell you a software license or trying to fit you into a box of this is what we do with this type of client. Find somebody that really wants to understand your business. No matter how non-customized things are, each client, each institution is different. Having been a part of a few in my time, they all have their own language. Everybody has their own acronyms. Everybody has their own everything. They're all their own things. So make sure you find someone that's really interested in getting to know you. And we found that finding that type of partnership, you can get through a lot of things, and you can get through a lot of challenges that will come no matter what. But having someone that's truly vested in your success with you, it just makes things a lot easier.
Makes perfect sense. Boris, you're up.
Yeah, I mean, I guess I would finish off from a vendor standpoint. I'm uniquely, I guess, qualified because I've probably spoke with 1,000, firms and heard their questions over the 16-year career here at SS&C Advent. I would say two things to remember from where you all sit. One is there's a lot of really great technologies coming out, but probably the most underrated and one of the most important things to consider during an evaluation is what is the vendor's approach to ensuring that your data is accurate and governed properly every single day. Because no matter how nice the dashboard looks or how unique the workflow is, if the tax lots are off, if you've got breaks every day, if you've got missing prices, you really want to understand what that vendor's approach is to managing the data governance and the data management every single day, and also what's their investment in making sure there's transparency back to you all, because you all are still ultimately the fiduciary and responsible for the portfolios and the advice and the investment decisions. And so having that transparency is huge. So I would say that's definitely one area of evaluation that I would recommend focusing on. And then the other one would be, what's their approach to just reinvesting into the product, right? I think Jake had a really great example of, things show up more quickly. I can assure you that any vendor you all have at your firms does not solve 100% of the problems you wish it would solve. We're not there either, but I think the process by which a vendor goes to have a continuous feedback loop, have that feedback end up back in a product, and continuously provide value back to you all as subscribers to those solutions, that's a process you should really sort of look through and talk to your vendors about and figure out what that looks like, because that's that ongoing steady state that you should really be evaluating. I think a lot of people sort of say, well, these are the things I need to get off, and then they forget about what's the rest of my relationship going to look like. And I think those are factors you should absolutely consider.
Thanks, Boris. That certainly makes tremendous sense. I mean, at the end of the day, communication is so pivotal. Mm-hmm. And so I with that, we're right about closing time, and I'd like to make sure that everybody notes the contact information that we've placed in the chat. It's been a pleasure to have you with us today. We hope that you found this to be a useful presentation and conversation, and we would welcome any questions, feedback, or comments. But in the meantime, many thanks, and enjoy the rest of your day.